This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on January 13th, 2017, Friday the 13th. Our time right now is 8:47 Mountain. Radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. If you ever miss a show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes, also on TuneIn. Can't forget about our YouTube page. And 630 CHED is on Apple Music. You can listen to us anytime you want. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. Featured diamond of the week is a .32 carat emerald cut, fancy intense purplish pink argyle. It's a beauty. See it online at rarecoloreddiamonds.com, featured diamond of the week. Now we're taping on a Friday. On Monday, it is a holiday in the United States. The markets will be closed. It's Martin Luther King Day. Then the following Friday, the 20th, it's Inauguration Day in the United States, and the 45th President of the United States, Donald J. Trump, will be inaugurated as the new president. And I have to admit, as I watched Celebrity Apprentice and Apprentice all those years ago, if you would have said to me that Donald Trump would be president one day, I have to be honest with you, I probably would have never believed it. But we are in very, very different and interesting times. And right now, we seem to be in a bit of a holding pattern, Harold, with people waiting for Trump to be inaugurated, find out exactly what his economic plans are, because at this point, we just don't know. But once we start to flesh out and get an idea of where he wants to take the United States, we should probably have a better idea of where the U.S. dollar goes, where interest rates go. But in our opinion, you want to be in the U.S. dollar. That is the place to be because it's going to strengthen against the Canadian dollar in 2017.
Yes, it's going to continue to do that, Randy. There's no doubt in my mind whatsoever. In fact, the year started off, 2017 started off similar to 2016. In 2016, the price of gold started the year at $1,050 and quickly made about a 30% increase all the way up to $1,380. $1,380 is where we put out a sell recommendation on gold for the short term, and gold fell all the way back down to $1,120, and that's how it ended 2016. Now it's 2017, and we've seen gold go from $1,120 to $1,200. But that's basically just because at the end of 2016, gold had dropped so much and the U.S. dollar had gone up so much that basically you're just seeing a slight correction at this particular point. Nothing has changed as far as my outlook for the market. I do believe that everything is based around the U.S. dollar, and the U.S. dollar, in my opinion, is going to skyrocket. I think that the U.S. Is the best economy in the world at this point. The U.S. dollar is the strongest currency, and on top of that, it will continue to increase primarily because the U.S. is the only country in the world that can raise interest rates at this particular time. So what we do see happening is that the U.S. dollar will continue to run. Now, no market goes straight up. There's always corrections because you've got buyers and sellers in the market that trade short-term and long-term. We're more of a longer-term view. You know, we don't trade the heavily speculated markets. We don't recommend that our clients leverage or finance any of their positions. You know, we're more conservative in that sense. However, there is opportunities to make an awful lot of money and still be extremely conservative. You know, we've hit the U.S. dollar over the last 4 to 5 years, and it's made our clients a fortune. Most of my clients are in private investments with my firm that are not only getting paid in U.S. dollars, but they're making over 25% a year. I know that sounds a little bit far-fetched, but these are private investments that are primarily with my company. They're not trading stocks or commodities type of thing. You're basically investing with me as a partner. So, again, at this point, we're looking that the U.S. dollar will continue to strengthen. We think that the U.S. dollar will not only break 110, but hit all-time highs. that should push the price of gold back down to $1,050. And if it did break that price, it could literally go to the $900 level short term. So again, that's what we feel about that. There is a direct correlation between gold and the U.S. dollar. When the U.S. dollar is strong, gold is a weak commodity, and that's what's happening at this particular point. Best reference I can give you is back actually in the 90s when the U.S. dollar was at its highest level. When the U.S. dollar hit 110 in the futures market, the price of gold at that point was at $250. So you can see what I'm saying, that when the U.S. dollar is strong, gold is at its weakest. But then we started putting out a buy recommendation on gold back in 1999-2000. It was at $250 an ounce. The dollar was hitting an all-time high, and things were starting to change in the world economy. So I remember on our radio show at that particular point recommending to all of our listeners to sell out of stocks and to buy gold at that particular point. Gold was at $250 and silver was at $3.80, and we wanted our clients to invest physically in both of those markets. And we had the largest bull market in history. Gold went from $250 all the way to $1,900. Literally millionaires were made during that particular time. It was the biggest bull market of all time. So basically, in 2011, when gold hit 1920, the U.S. dollar had dropped all the way down to the lowest level of 72 cents. There again is the direct correlation between gold and the dollar. When the dollar fell to 72 cents from $1.10, gold went from $250 all the way up to $1,900. Biggest bull market of all time. Silver went from $3.80 to $50. And now at this particular point, here's where we are. We're at a point right now where the U.S. dollar has gone all the way from 72.5 cents in 2011 all the way to where it's at $1.02 today. So that's a sizable move. What happened to the price of gold during that particular time? Well, in 2011, when the dollar was at 72.5 cents, gold hit its highest level ever of $1,920. After 2011, the U.S. dollar went from 72.5 cents all the way up to $1.03 that we hit this month. So this is why gold has dropped from 1,900 all the way down to 1,120 that we saw at the beginning of the year. So at this particular point, if we believe that the U.S. dollar is going to continue to strengthen, which we have to, because there's no way it's not going to, then what we need to do at this point is be long the U.S. dollar, short gold, and short the Canadian dollar. The reason I'm saying the Canadian dollar is because of the Canadian economy at this particular point, and the fact is that the banks in Canada are not in very good shape. That's something that you really need to be concerned about at this particular point is the strength of the Canadian banks. You know, back a few months ago, the Canadian government approved a bill called C-15, and even though the Canadian government owns its own banks, they will not bail out Canadian banks when they go under. Randy and I were shocked by this, not that we didn't expect it to happen because we saw what happened in Cyprus a few years ago, and we knew it was going to happen, but it's happening now. And the fact is that if you don't know about C-15 bill, you need to get in touch with me because it puts you in a very, very bad position. It means that the banks can literally take your money and pay off whatever debts when they get into trouble if you're not situated in the right way. So please, it's a major big deal. You need to contact me so I can explain to you what's happening with C-15, how it's going to affect you moving forward, and how you'll protect yourself against losing all your money by simply keeping it in the bank. Do you realize now that with the bank interest rates at 0.5%, very few people will ever retire? Because how do you make money when putting your money in the bank where the banks are not safe and you're getting paid 0.5%? After inflation and taxes, you're literally losing money. And very soon, we'll be going into negative interest rates, which means that you're actually going to have to pay the bank in order to keep your money there. How crazy is that? Pay the bank instead of the bank paying you, interest on your money. You're going to literally have to pay the bank. You need to be aware of these changes. They're coming fast and furious, and You cannot afford not to have the information that you need to make an intelligent decision. So again, with the state of the world economies at this particular point, the U.S. is in the strongest position. They've raised interest rates at the end of 2016, which we saw a strong push in the U.S. dollar, which pushed it over par, and we got all the way up to 103. We think we're going to see at least 3 interest rate hikes in 2017, which is going to push push the U.S. dollar all the way to 110 and possibly to the highest levels that we have ever seen in history in the U.S. dollar. And again, that gives us an opportunity to make a fortune of money. You need to contact me so you can find out what your opportunities are. My Canadian clients are getting paid in U.S. dollars, and they're making over 25% return on private investments with my company that, again, you need to learn about. So with the way things are at this particular point, we see the Canadian dollar falling substantially. So why in the world do we need to stay in Canadian dollar-based investments when it's going to hurt us? We need to get out of those and into U.S. dollars. And the fact is that the Canadian dollar is probably going to go to the 180 level. That means that it's going to cost you, if you went to the United States on a vacation or whatever, you'd have to pay $1,800 Canadian to get $1,000 American. That's what I believe is going to happen. It's a substantial 80% difference in the dollar, and we need to make money on that. It's a phenomenal opportunity. It's a conservative investment, but you need to get out of Canadian dollars and into U.S. dollar-based investments with me because, again, our clients are making over 25% return on the investment. And then on top of that, they're getting paid in U.S. dollars, which is a phenomenon at this point. So, again, Randy, at this point, again, we saw a rally in the month of January for gold, but that happens almost every single year. Again, at this particular point, I think it's almost running its course, and I see the market heading back down in gold over the short term. Now, please understand that over the long term, we're bullish on gold. But we need to get through this situation with the dollar in order to get to a level that we want to buy gold at a phenomenal price, and I think we're going to have that opportunity. So, again, I only see great things happening for us in 2017, Randy. Very, very excited about it. The year started off with a bang for my company, and my clients are ecstatic about what's happening in the marketplace for us. If you want to learn what we're doing, you need help with your investments, just pick up the phone. You know, the funny thing is we offer this every single week. And then when clients call in, first-time clients that have never spoken with me before, they're absolutely shocked that I'm actually getting on the phone with them. Believe me, there's no egos or anything here. My clients are the most important thing to me. My clients are not the Warren Buffetts of the world. They're everyday, hard-working people, Canadians that show up every day and do the best job they can for the family. However, with the Canadian dollar falling, and the real estate market in trouble, and the banks in trouble in Canada, don't sit there like a lame duck. Let me show you how we can get out of negative situations and into things much more positive that will help you moving forward. So, again, Randy, I see 2017 as a phenomenal year and very, very excited with what's happened so far in this year for us.
Donald Trump had a press conference. The U.S. dollar was very strong. He had the press conference. It weakened somewhat. Obviously, the action-reaction is gold going up. There's uncertainty about Trump, and that's one of the reasons we're seeing some volatility in the U.S. dollar and in gold as well. He gets inaugurated. He gets settled into the job. Here's hoping that the sideshow activity stops. He can just do the job. I think at that point, we start to see things move more in a steady direction our way. Connect with Harold, 1-800-432-1022. RareColoredDiamonds.com is the website. Telephone number 1-800-432-1022. We have a featured diamond this week that is absolutely gorgeous. If you have never been to RareColoredDiamonds.com, Harold has vaults of diamonds that are museum-quality investment pieces, and this is one of the best. It's a .32 carat, emerald-cut, fancy, intense, purplish pink argyle. Second half of the show, we'll talk about the Argyle mine. Well, we're a year closer to it shutting down. Here it is, 2017. It's going to be shutting down in 2020. We'll talk about that in the second half of the show, but go take a look at our featured diamond, the 0.32 carat emerald cut, fancy, intense, purplish pink argyle. Now, as we've been reporting for a number of weeks, there are people that are very negative on the Canadian dollar, bullish on the U.S. dollar. We had the report from Macquarie Group saying that the Canadian dollar could drop to 65 cents U.S. in 2017. Last year, we had the story about Jared Dillian, market analyst, coming out saying the Canadian dollar could go to 150, 160. Now, it's interesting to note, there was a forecaster, and he was one of the top forecasters, according to Bloomberg, who basically said that in 2017, the Canadian dollar is going to stay roughly where it is today. But on the other end, his name is Conrad Balaus, chief economist of a Warsaw-based foreign exchange broker. Now, on the other side of things, there are people that are not bullish on the Canadian dollar, more people. There are some holes in the Canadian story, according to John Hardy, head of the foreign exchange strategy at Saxo Bank in Denmark. He is one of the most bearish forecasters of the currency, expecting the loonie to weaken to 148 per U.S. dollar by the end of the year as the greenback strengthens further. Canada has got a housing bubble that puts the U.S. housing bubble to shame, and he's calling for 148 on the Canadian dollar, U.S. dollar, so that's something to keep in mind. Macquarie, 65 cent Canadian dollar. We've got 148 according to Saxo Bank. You have Jared Dillian coming out saying 150, 160. And then this week, the Federal Reserve, one of their bankers, John Williams, out of San Francisco, coming out and saying that 3 interest rate increases in 2017 is a reasonable assessment of what the U.S. Central Bank should do at a time when unemployment has declined and inflation is slowly moving up. He said that his colleagues believe that definitely in 2017 there will be 3 rate hikes at the bare minimum. And let's take a look at it, as we've said on past shows. At this point, we don't know what Donald Trump is going to be doing, but if you get into a scenario where he really starts to put a lot of money into infrastructure spending and spurring on the U.S. economy, you could potentially see more interest rate hikes. In Canada, we will not be raising interest rates. We may, depending on how the economy goes, be lowering rates. If that's the case, static or a rate reduction, and they're raising rates in the United States, you can pretty much guarantee the bet will be that the Canadian dollar will obviously go down, U.S. dollar will go up. And Harold, that's the theme, as you've said off the top with your commentary. We really believe that's the path going forward in 2017. A lot of people believing in what you say. So now would be the time, as we're at the very beginning of Trump becoming president of the United States next Friday. Get into the U.S. dollar, have yourself some U.S. dollar-based investments, and the person to talk to about that is Harold Siegel, 1-800-432-1022, 1-800-432-1022, the website, rarecoloreddiamonds.com. Now, Harold, back when we started doing the show in 2002, gold was around $300. Gold went from $300 all the way to $1,900. Silver. You had silver at around $3, all the way up to around $49. The euro, 87 cents. It went up to all the way around $1.60. Not to even mention, Harold was recommending at one point in time that we invest in gold and silver coins that were through the Vatican. Those were an outstanding investment, and when the Pope passed away, they actually put in his coffin those coins that we had been investing in. So they basically became heirloom-type pieces as an investment as well. Harold, Pick the oil market. I remember it very well. Oil being around $20. And Harold saying that oil could go all the way to $150, and it did. It did almost hit $150. So the calls that Harold has made, including his recent calls on the U.S. dollar, have been spot on. And I know that we, on a regular basis, have people phoning Harold, congratulating him on the call on the U.S. dollar. And Harold, we still believe the best is yet to come based on what we see in front of us. A Trump administration, a Canadian dollar that obviously is going to be going down based on interest rate increases in the United States, static in Canada. So it's a time where people need to step up, speak with you, and start to get positioned to take advantage of what's going to be happening in 2017. Don't sit back and wait. Now's the time to take advantage and get situated as we have a very interesting 2017 with a brand new president in the United States. We have about 2 minutes left in our segment here.
You bet. Again, at this point here, it seems very clear to me that Trump, being in the building business, and I do know him very well. I see him often play golf with him the odd time, and I go to his clubs. But the fact is that he's a builder. And one of the things that he is going to do is rebuild bridges and roads and things like that. So I do believe that the economy is going to surge. I think he's very rough around the edges, but I think that that's exactly what, we wanted in the United States at this point is not a politician, a businessman, because the U.S. and every country is a business, and if you don't run it like a business, you're going to go bankrupt, as most countries are doing at this point. So, the people have spoken. He's the president. He's, I think, going to do a very good job, and I believe the U.S. dollar is going to hit the highest level it's ever hit, and I want to be part of that, and so do my clients. So, again, you need to get in touch with me. I'm going to show you exactly how we do this. It's a conservative situation, but we can make a lot of money with it. And, again, our time has come. 2017 is going to be a huge year for my clients.
Our featured diamond of the week, go take a look at rarecoloreddiamonds.com. It's like going to a museum and seeing the world's finest rare-colored diamonds. Rarecoloreddiamonds.com, featured diamond of the week, a .32 carat emerald cut, fancy, intense, purplish pink argyle. And here we are. We're taping today's program on the 13th of January, 2017. And one of the targets we were given for the closure of the Argyle mine in Western Australia that produces 90 to 95% of the world's pinks, 2020. So here we are, and I remember talking about this years ago, a few years back. Here we are, 3 years away from the Argyle mine shutting down. And we'll talk more about that when we come back. But keep in mind, there are windows of opportunity, and one must grab them. Connect with Harold, find out more, 1-800-432-1022. The website is rarecoloreddiamonds.com, and we'll come back and talk about diamonds. The World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping on January the 13th, 2017. Our time is 9/11 Mountain. Our radio show runs on 6:30 CHED, Sunday afternoon at 3. If you ever miss a show on CHED, don't forget, we're archived. And we're streaming 24/7 on Harold's 2 websites. You can listen anytime you want, HESradio.com, rarecoloreddiamonds.com. Now, let's say you like to listen to podcasts. Maybe you go walking, jogging, like to listen to a podcast. We have one of the radio show through iTunes. All you need to do is type in the World Financial Report on Radio, download the podcast to your device, and it's portable. We go anywhere you do. We also have a YouTube page with the radio show, and we're on TuneIn as well. 6:30 CHED is on Apple Music, so lots of bases that we're covering to keep you up to date weekly, obviously daily, weekly, monthly, yearly on the financial markets. You work so hard for your money. You go to work, it's minus 40 out, you're busting your backside, and yes, it's very difficult, but we're going to show you how you can take that money and, at the same time, obviously profit and protect that hard-earned money. Connect with Harold at 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com, rarecoloreddiamonds.com, and definitely go take a look at our featured diamond, that .32 carat emerald cut, fancy, intense, purplish pink argyle, because it is an absolute beauty. And Harold, 2017 was the year of the 2016 was the year of the blue diamond, and I guess we'll have to wait and see what 2017 brings. But we are getting closer and closer to the Argyle mine shutting down.
You bet we are. Again, and we're going to see similar. Again, blue diamonds have gone up tremendously, but there's hardly any blue diamonds in the world for sale. So the fact that, maybe 4 or 5 of them actually came up for auction in 2016 was actually absolutely quite stupendous. So there's very, very few of them that ever come onto the marketplace, and I believe that we'll see blue diamonds continue to skyrocket. Back in 2005, at an auction, a vivid blue important diamond sold for $200,000 a carat. This year, which was 11 years later, those same diamonds sold in the $4 to $5 million range. So again, these important diamonds have gone up tremendously. On top of that, they will continue to do so, and we're just ecstatic with what happened in the rare colored diamond market in 2016. We're concentrating heavily on green diamonds. We believe greens are the next blues. They're extremely rare. We believe that our clients are going to make a fortune on them, and that's what we want to continue to happen. So, again, the next big trend in diamonds is going to be in green diamonds, and those are the diamonds that we are actually cutting and polishing at this particular point. So we're just ecstatic with how 2016 was in the rare color diamond market. Now, the pink diamond market is probably the best investment that you could make at this point, because 95% of the pink diamonds in the world come from one mine, the Argyle mine in Western Australia. So the fact is that when this mine closes, there will be no more pink diamond. And just like blue diamonds, we'll see the price of certain pink diamonds go through the roof. Obviously, the larger they are, the stronger or more saturated the color, the cut and everything has a big effect on how those diamonds will increase in value. In actual fact, obviously, the biggest and rarest and most saturated colors will go up the most. But percentage-wise, diamonds will just continue to do tremendous. Rare colored diamonds like pink diamonds at this point increase by about 15% a year. The closer we get to the mine closing down, which is going to be in 2020, that's when these diamonds will really start to take off. So we're excited for our clients, realizing that the fact is that our pink diamonds will continue to increase. We only have 3 years left until the mine closes down, and that's a situation that will never, ever happen again. We will never find another opportunity to do what we're doing in the pink diamond market, and that's primarily because there's no other mine in existence that produces 95% of any colored diamond. So, again, at this particular point, we're just thrilled with what the situation is moving forward. We want to concentrate heavily this year on pinks, greens, and oranges. We believe that those are the diamonds that are going to make our clients the biggest return on their invested dollar.
Featured Diamond of the Week from the vaults of rarecoloreddiamonds.com. We have a very rare .32 carat emerald cut, fancy, intense, purplish pink argyle. See this diamond online. Featured Diamond of the Week, rarecoloreddiamonds.com. Get our free weekly newsletter. It's the companion to our radio show. You're going to be reading the same articles that Harold and I are on the same page as we go through the radio show. You can read the same material. and it's a must-read. It's the World Financial Report on radio. Get it from Harold, 1-800-432-1022, rarecoloreddiamonds.com. And one of the highlights of 2016 was the sale of the Oppenheimer Blue, and Raul Katika, Christie's international head of jewelry, recalls an astonishing 20-minute bidding battle that ended with a world record price for any jewel sold at auction. At 14.62 carats, the Oppenheimer Blue is the largest fancy vivid blue diamond ever to appear at auction. And on May 18th, at the Four Seasons Hotel in Geneva, it set a world record for any jewel when it sold for $58 million. Bidding took over 20 minutes, according to Katika, Christie's international head of jewelry. It started with multiple bidders and then settled down with two collectors bidding competitively in varying increments to get to the final world record price. The diamond was named in honor of its previous owner, Sir Philip Oppenheimer, the racehorse owner whose family controlled the De Beers Group and was the latest in a long line of distinguished blue diamonds to have appeared at Christie's. They included a blue diamond ring owned by Marie Antoinette, and in 1983, that diamond sold. Also, the Wittelsbach diamond in 2008. Sir Philip developed his eye for extraordinary gems after leaving school, sorting and valuing rough diamonds and sale parcels at De Beers, first in London and then in the cutting centers of Antwerp. After a distinguished military service career in the Second World War, he took over De Beers and obviously developed it to what it is today. And one of the great sales of 2016 was the Oppenheimer Blue. The room was filled with more than 300 clients, and it took 20 minutes. And there was a big cheer at the end when the stone went for the world record price of $58 million. And De Beers, by the way, has been in office and actually been around 250 years, if you can believe that. Just an incredible gem. And Harold, that's the great thing about investing in diamonds. The history, the provenance behind rare-colored diamonds, it's simply outstanding. Now, not everyone, as we say on the show, has to be a billionaire or a multimillionaire to invest in this market. In fact, we find with the auction results that we get from Christie's and Sotheby's and other outlets that a lot of times the diamonds that we offer our clients, those are the ones that may be smaller, but when it comes to price increases and when it comes to sales at auctions, they have incredible power because they usually go for well over the estimate that was originally anticipated at auction.
You're 100% right, and it's been exciting to see that. So, yes, it is great to, and very exciting, obviously, to let everybody know what these amazing, huge diamonds have sold for. I mean, $25 million and $50 million are huge numbers. But in all honesty, that is not our clients. Our clients, as I mentioned earlier in the show, are hard-working, everyday Canadians, and the fact is that, you know, most of our clients aren't the Warren Buffetts of the world that have that kind of money. If you look at these auctions, a lot of the diamonds that are under $100,000 have actually gone up more than the diamonds that are 25 and 30 million. So it's very exciting to see the fact that yellow flawless diamonds have gone up as much as they have. The pink diamonds from the Argonne mine are really starting to move and should be the biggest return of all diamonds in 2020. So again, this is really a phenomenal situation. Another thing is with all the countries around the world that are in trouble and all the currencies that are in trouble everywhere, the fact is that colored diamonds can be sold in other currencies. It's an amazing situation. People can leave a troubled country and take a diamond with them, whereas to take gold or take stocks or take cash is extremely difficult to do. So again, there's other reasons to own rare colored diamonds. Myself personally, I own a huge collection of diamonds. However, I put away diamonds for my grandchildren over the years. And the fact is, where I wouldn't buy them a stock or a bond or a mutual fund or anything like that, I would certainly put away diamonds for them. So the fact is that as grandparents and as parents, it's a good thing to do. If you look at how your retirement savings plans are working out for you, you'll understand that alternative assets, like we deal in, are far superior investments than the mainstream investments. People do not do well in stocks and commodities. 90% of the people that trade them lose their money. So why in the world would we want our clients to trade in those markets? We're much more conservative. We're heavily invested in the alternative asset market, and that is proving that these are the alternative asset markets are the ones that give the biggest returns. So, again, we're ecstatic with what's happening. We believe that 2017 and moving forward are going to be phenomenal years for our clients and us. And, again, all we want is for the listeners to our show to be on board, to be out of Canadian dollars, to get out of your retirement savings plans because they will make you no money at all. And let me show you how to take that money and turn it into something much more substantial.
In our free weekly newsletter, we have a story, The Ultimate Luxury, why 2016 was the year of the colored diamond. And that is an outstanding article we can send to you in our free weekly newsletter, along with my highlight of 2016, the Oppenheimer Blue. Raul Katika, the Christie's international head of jewelry, recalling how in 20 minutes the Oppenheimer Blue sold for $58 million. That's the excitement of this rare colored diamond market, and our featured diamond of the week, a 0.32 carat emerald cut, fancy intense purplish pink argyle. See it at rarecoloreddiamonds.com, featured diamond of the week. And we have followed the Argyle mine in Western Australia for a long period of time. Here we are, down to approximately 3 years left in the mine's life. They may have some diamonds in the vault that extend things for a few years with their pink argyle tender, but other than that, it is all over in a matter of 3 years. Get your hands on a diamond like the featured diamond from the Argyle mine as soon as possible, as they will not be around except in the secondary market very, very soon. 1-800-432-1022 to speak with Harold Siegel, personally and privately. The website, rarecoloreddiamonds.com. And we talk about reasons to invest in naturally fancy colored diamonds, rare colored diamonds. Number 10, their value and rarity is recognized globally and can be sold in any currency. The easiest, safest, and most discreet way to transport wealth in the world. They're not directly tied to a global market, which safeguards against market uncertainty. Less than 1% of all colored diamonds mined are considered investment grade. Colored diamonds are the most concentrated form of wealth in the world. No new mines producing colored diamonds have been discovered. Colored diamond mines are shutting down without replacements. A hard asset is a very important diversifier in a portfolio. And when we hit volatile times, that's what you want. Diversity and a hard asset so you can profit and protect the money that you have. Based on a diminishing world supply, experts predict dramatic price increases in the immediate to near future in the rare colored diamond market based on what's happening around the world. And finally, naturally fancy colored diamonds, rare colored diamonds, have never decreased in the past 30 years. Harold, we're talking about the rarest of the rare, privacy, portability, estate planning, price stability, good long-term growth. This is something somebody should have in their portfolio, and we encourage them to talk to you personally and privately. 1-800-432-1022. The website is rarecoloreddiamonds.com. And Harold, we can't stress enough, it just seemed like yesterday. It was 5 years before the mine was going to shut down. And here we are 3 years before you knew it. We'll be blinking our eye and we'll be reporting that the mine is shut down. And those that have been waiting to get involved in this rare color diamond market will have missed the opportunity of a lifetime with pink diamonds.
You bet, and there's no reason to do that. At this point here, you can get involved in Argyle Pink starting at around $50,000. So the fact is that these are not out of reach for most people. Investment-wise, I think that they're going to return more than almost any investment out there. So they never decline in value. Yes, it's a longer-term investment most of the time, but again, the phenomenon of the Argyle mine is right in front of us, and we will never, ever get an opportunity to do this again. So I highly recommend that you go over your investments, and again, if you are looking that you have stocks, mutual funds that are not doing well, give us an opportunity. The alternative asset business is doing extremely well. And again, my clients are doing well because they're in U.S. dollars and they're out of the stock and commodity markets where 90% of the people lose. So again, we're ecstatic about what the future brings. All we want at this point is for our clients to be in the right position, and that's exactly what you need to do, is get out of Canadian dollars and get into U.S. dollar-based investments with my company that make over 25% a year.
And we've heard the call from Macquarie Group, Canadian dollar going to 65 cents. Jared Dillian, as we've mentioned, 150 to 160 U.S. dollar, Canadian dollar. We had that report today, 148 from another company. So you can see that the projections on the Canadian dollar, it's definitely in 2017, Canadian dollar weakens, U.S. dollar strengthens. Now is the time to position yourself. Speak with Harold. He will explain all the ins and outs and the different programs he has in place where you can start making money today. 1-800-432-1022, rarecolorediamonds.com is the website. And in the environment that we're in today, it's obviously very hard to retire. You have interest rates, as Harold mentioned, at 1% or below. If you're not in a retirement vehicle, well, you're basically getting eaten up by inflation and taxes. Even if you are in a retirement vehicle, even at 1%, using the rule of 72, your money would double in 72 years' time, which, let's face it, if you're in your 40s or 50s or 60s, you are not going to retire with your money doubling in 72 years. It's just that simple. And that's where there's alternatives, and that's where Harold Siegel comes in. Everyone is worried about losing the retirement money due to another financial crash. And in our free weekly newsletter, we have information on the stock market. And there are stories this week where different analysts are saying that the stock market, where it is today, is extremely, extremely overvalued. It's at a level that it has never been at, and the potential is there that maybe once Trump settles in after this big run since he was elected in the stock market, once he settles in, we could see a major pullback. And let's face it, we saw that in 2000 and 2007 and 8 during the financial crisis. Will we be able to retire? And that's why we do the radio program. Harold takes your calls. He'll be happy to speak with you personally and privately. He talks with many listeners each and every week. He'll be happy to talk to you. All you need to do is call him at 1-800-432-1022, rarecolorediamonds.com, and he'll be happy to give you his opinion of where the markets are going, where you need to position yourself. And if you take a look at where we are today, manipulated stock market, bonds and real estate, historically overvalued along with the stock market, and people very concerned about what that means. Bill C-15, as Harold touched on, the bail-in bill for Canada. How do you protect yourself with that? Negative interest rates, weak Canadian dollar, housing market pullback in Vancouver due to the restrictions they've put in place. Obviously, in Toronto, things continue to go up. They haven't put any restrictions in yet, which is concerning unto itself. A cashless society. And what does a cashless society mean for the average everyday person? Lots of questions, people looking for answers. That's why we put out our free weekly newsletter. That's why we do our radio show. We're here every week, obviously every week, every month. We're here for you. We have the radio show, as Harold says. We have the free weekly newsletter. We're here to help you profit and protect the money that you have, that you've worked so hard for. And Harold, you are more than happy to take any calls from people at 1-800-432-1022 or connect with you at rarecoloreddiamonds.com, because 2017 is going to be a very critical year with a brand new president in the United States. And obviously, things in Canada, concerns about a housing market meltdown. Now's the time to speak with you. Do not delay.
You bet, Randy. Again, I love speaking to clients. In fact, many times I get to speak to people that have listened to our show going on 15, 16 years now, but have never, ever called in. So it's really a pleasure to be able to do that. And again, love speaking to our clients. So at this point, things are not as confusing as you may think it is. The fact is that 2017 will be a time to be more conservative. There's a lot of people that are hurting financially, especially up in Canada with the oil patch and what's happening in Fort McMurray and the fires up there and the real estate markets, which I believe is going to be a major, major problem for the banks. That's why I believe that C-15 bill actually happened, because the Canadian government is so concerned about the banking situation. So if you're not familiar with that, you need to give me a call. There's great opportunities out there, just not in the markets that you've traded that you're comfortable with. The real estate market is going to be tough, and so is the stock market, where 90% of the people lose there. So, again, there are alternatives. There's opportunities to make money in other areas that you may not have been involved in before, but are available to you. So, again, all we want is for the listeners to our show to be able to do well. Interest rates are going to go negative, and that's going to be a major eye-opener for a lot of people. Again, you can't retire off keeping your money in the bank anyways, and the banks are not safe. I cannot stress that enough, that the Canadian banks are not safe. If they were, the Canadian government never would have come out with C-15. It's only to protect the government. It has nothing to do with you. The fact is, if those banks go under, you're going to lose most of your money. And we want to make sure that doesn't happen to you. So, again, pick up the phone and give me a call. I'll explain what your options are, which directions you need to be moving in, which investments of yours are strong and which ones are not, and how I can possibly help you. Again, let's make 2017 an amazing year for us. Most people at this point don't know what to do, but I think we've proven over the years that we have a very good grasp and handle on what's happening in the financial markets. And again, our clients have been able to take advantage of that over the years.
Interesting to note, there was a story this week, and we hear this continually. I would imagine it's probably roughly the same case in Canada, not just the United States. 6 in 10 Americans don't have $500 in savings. If you were suddenly hit with a $500 unexpected bill, would you be able to cover it? If the answer is no, well, you're not alone. Nearly 6 in 10 Americans don't have enough savings to cover a $500 to $1,000 unplanned expense, according to a new report from Bankrate. Only 41% of adults reported have enough in their savings account to cover a surprise bill of this magnitude. And most people would put it on a credit card. So it's obviously a tough time for many people, and we're here to help with our radio show. And Harold, we have about 15, 20 seconds left. It's 2017. Now's the time, if people have not spoken to you, to pick up the phone and call today.
You bet, Randy. Again, excited about 2017. We wish all of our listeners a very happy new year, but it could be a lot happier if you're making money. So give us a call. Let me explain to you what we're doing here and see if it fits into your portfolio. I'd love to wish everybody a wonderful weekend and a very profitable day.
Connect with Harold, rarecoloreddiamonds.com.